What's going on, you guys? Welcome back to another exciting video by Real FX. In this video I am going to be teaching you guys about liquidity sweep. Now if that sounds like something that you are interested in, stick around till the end of the video and don't forget to give us a thumbs up. And if you haven't subscribed to our channel, don't forget to subscribe, and I'm gonna see you guys right after this intro. Now before we continue guys, I want to give you some good news. Since RealFX has been getting many requests about mentorship services, we have decided to create mentorship programs. So for now, this is what we offer at RealFX. We offer two kinds of mentorship programs. We offer the gold mentorship, which comes with the market breaker beginner strategy, and in this package you'll get a step-by-step guide throughout the mentorship. You'll get a weekly market breakdown, and on the platinum mentorship you will get the Real FX dynamite strategy, which will be taught in a very simple step-by-step guide. It also features a weekly market breakdown and a trading plan that anyone can follow. And in all these packages you get a trading psychology lessons, and our mentors will always be ready to answer your questions. And all these mentorship packages are valid in a period of 3 months. So this is it guys, join the mentorship and in 3 months you'll be the trading beast that you want to be. Now if you're interested in the mentorship, I will leave a link in description and you can click on it and it will take you to our admin and she will take it from there. Okay, now guys, before we talk about liquidity sweep and I give you the liquidity model that I'm talking about, first I want us to talk about market structure. So we're going to talk about the basic market structure, which is the textbook example of what we are taught when we begin SMC, and after we're going to talk about what's really happening in reality when we are trading, and then after that, that's when we're going to introduce the whole concept of liquidity sweep. Now when we begin SMC, we are taught that the market is composed of higher highs and higher lows. So that's how we see our market structure. So if we are in an upward trend, we see a series of higher highs and higher lows like this. So this here our highs. So as you can see here, we are having our highs. This is a low. Actually we have another low here. This is a low here, this is a low over here, and then we then have our highs. This is a high, and then this is also a high, this is also going to be a high. So in an upward trend we are told that the subsequent high should always be higher than the previous one. Also the subsequent low should be higher than the previous low. So this is a sign that we are in an upward trend. And then when we look at a different trend, which is going to be a downward trend, we are looking for a series of lower lows and lower highs. As you can see, the subsequent low is lower than the previous one. The same goes for the highs of our trend. Now we have a downward trend here. So this is the textbook example of what's really happening in the market. Now we are going to look at what happens in reality. Okay, now let's look at what's really happening in the market. Now we are going to talk about the reality of the market, because let's face it, if things were taking place as they are shown in textbooks, then everyone would be rich right now. So let's look at what's really happening in the market. So this is what we can expect from the market. Okay, so this is what usually happens in the market. This is an example of an upward trend that could take place in the market. So as you can see here, this is an upward trend. We can spot our highs here, we can spot our lows, but there are a lot of things which are taking place which can be confusing to a trader who does not understand what has to be done. Okay, so for example, let's talk about this part over here. Let's talk about this part over here and what it could mean to someone who does not understand anything about smart money concepts and how they would execute their trades around this area. So here what we can see is we have some sort of a push, and then a retracement, and then a push to the upside. Now it's possible for someone to believe that, okay, here this is a break out of structure. Okay, now taking this as a break out of structure, that simply means you are looking to buy, where you are looking for the market to retrace into your area like this and then push to the upside, and then that is most likely not going to happen. So if that fails to happen, an inexperienced trader will again look for a trade to the downside, because now you are like, okay, this simply means that the market has changed its trend. It simply means after this area over here, you would come and label it as a change of character, and now you're looking to trade the market going to the downside. So let's say you put your trade and then your stop loss somewhere around there, and then the market pushes a bit to the downside, you are excited, and then the market again pushes to the upside, then takes you out. Now it's gonna look as if the market is manipulating you most of the time, but that's not the case. The case is that you are trading the market in a wrong way, because the market has to generate liquidity so that it can move, and it can move into the original direction, the major direction. So as the market is busy generating liquidity, it's going to generate setups which are going to be invalidated. It's going to show you change of characters, it's going to show you breakout of structures which are going to be invalidated. Now this is where we have to talk about our liquidity sweep model. Okay, now let's talk about the liquidity sweep model. So this is not the only model that we trade at Real FX, but it's one of the models that we do trade at Real FX. So the mentorship is on, is still running. If you're interested, get the mentorship. Now let's talk about the liquidity sweep model. Now I'm going to talk about an upward trend. I like making examples about an upward trend, but the same thing applies to a downward trend. Now let's say this is what we expect in an upward trend. Now this is the low, this is the high, okay, and this is the previous high. So what we would normally do is we mark out the high. This is our high, this is our low, like this, okay, and this gives us our range. So what we would expect normally is that the market should reverse into this area here and then pull to the upside, but in reality most of the time that does not happen. Like I said, if it did happen most of the time, many people will be rich. So what happens is that the market pulls to the downside like this, it takes out this low over here, and then it forces people to believe that the market has changed its character, and then they're going to be looking to sell this market over here, and then it's gonna again push to the upside, taking out this high over here. Now here is an example of our liquidity sweep model. So this is our low, and this over here is going to be our high. Now this is a perfect example of our liquidity sweep model. Now let me include the 50% of this Fibonacci so that you can see what I'm talking about. Let's include the 50%. Here's the 50%. Let's change the color to white. Okay, now that is perfect. As you can see, this is the 50% of our range, and this is the low, this is the high. Now this is the liquidity sweep model that I'm talking about. Now where is the liquidity sweep? The liquidity sweep is on the low that we thought was protected. Now that when that low is liquidated and all the others on that low are taken out, now we say that low has been run out and there was liquidity sweep. Okay, so normally we see a liquidity sweep with one candlestick to the downside and then another candlestick pulling back into this area. Okay, I'm not gonna talk much about how we spot how the candles look like when we talk about liquidity sweep, but just know that this is a liquidity sweep over here. So this here, instead of labeling this as our breakout of structure to the downside or as our change of character, this over here is our liquidity sweep. So this was our breakout of structure to the upside. This here is not our change of character, but this is our liquidity sweep. Now after the liquidity sweep, the market then came and then took out this high over here. Now when the market took out this high, this is when we label this as a breakout of structure. Okay, now this we label it as a breakout of structure, and this here is our liquidity sweep. We label this as our liquidity sweep. So this is how it's gonna look like. Okay, now we continue. Now as you can see here, we have the 50% line over here. Now this 50% line divides our range into two. It divides our range into the premium and the discount. Now where is the premium, where is the discount? Now this area that I'm highlighting right now with red, this is the premium area. Okay guys, this is the premium area, and this area over here that I'm going to highlight with green, this is going to be our, this is going to be, let me change the color, this is going to be our demand, this is going to be our discount area. So we have the high, the low, the equilibrium, and then we have the premium area and the discount area. Let me just go ahead and label those guys so you don't forget. Okay, so that's the premium area, that's the premium area, and we also have the discount over here. We also have the discount over there. Now, so what we are looking for on this setup, we are looking to buy when the market enters into the discount, and we are looking to sell when the market is in the premium. Now whatever sell that a sell position that we're going to take in the premium here is going to be a minor sell. So we're just going to be scalping the market here because we want to be in and out, because the major move here is going to take place in the discount. And because of this liquidity sweep that we just saw here, our confidence in this setup has increased. Okay, so we took liquidity to the downside and then we broke structure to the upside. Now we are looking to buy into, we are looking to buy from this area here, the discount, and we are looking to sell in the premium. Now this is what can happen during the retracement. So during the retracement, we can see something like this, and then this is where we would look for our selling opportunities. But immediately when the market enters into the discount, this is where we make sure that we are out on all positions and we are waiting for our buying opportunities. So where do we find our buying opportunities? Before we look for any confirmation or for any order block or for any other thing that you might use as your point of interest, this is what you can do. This is what you can do. You can take again the Fibonacci tool, and then you put it from this high now, and then you take it to this level over here. Okay, now you take it to that level over there. Now this is going to make sure that you buy within this area. Now this is reducing your area of interest, the area that you are more focused on. So it moves it from being this huge area that we have over here. Remember, at first this is the discount where we look for buying opportunities, but now it is being reduced to this level over here. This is where we would have. Now if you do not know how to if you do not have strategies like points of interest, you don't know how to mark your order blocks, you don't know how to mark your QMLs, your QMRs, all those kind of things, you can just put your trade right over here, and then your take profit is going to be here and your stop loss is going to be at this low. But if you know how to trade order blocks, you know how to trade breaker blocks, QML levels, all those kind of things. You can still use those as your confirmation. So I want you guys to go out there and then test out the setup. It works, guys. So the reason why it works is because it's accompanied by liquidity sweep. You cannot trade if you don't know anything about liquidity, or you don't know where liquidity is located in the market. So as you can see here, if I was seeing a trade here, I would wait for the market to come into this area. I would wait for the market to come into this area over here and then start pushing to the upside like that. So there you have it, guys. That's the end of the video. I want you guys to go and test out this setup, test out the strategy, and if it works, just give me the feedback. And if you want to know more about these things, you can just join the mentorship, and I am going to create another video where I show you in real charts on how I apply what I just taught you guys.